But in 2025, when digital currencies and when artificial intelligence is just dominating the headlines, why do you think that gold still holds such a powerful place in global finance today?
If the UK can leave the EU and if the US can leave a North American free trade agreement, then smaller countries are going to say, well, if they can do it, I can do it. And that's where I think then that we're going to have maybe a much longer time period of global uncertainty.
What are some of the indicators, some of the economic and indicators that people should be looking at to be grounded in what the truth and the reality is? Hi, I'm Dominic Bowen, and I'm host of the International Risk Podcast. In 2025, gold prices have surged past 4,000 US dollars an ounce, which is the highest in recorded history. And as central banks from China to Turkey double down on their purchases, and some investors are fleeing from the volatile equity and bond markets, we have to ask the question, is this the new normal or the early stages of yet another bubble? To unpack these international risks, the economics, the psychology, and the policy forces behind gold's rise, we're joined by Dr. Moshe Lander. He's a senior lecturer in economics at Concordia University. Dr. Moshe, welcome to the International Risk Podcast.
Hello.
This year, we've really seen, I mean, for the last couple of years, actually, I think gold's doubled in price. And the central bank demand for gold has increased past 1,000 tons last year, which again is another record breaking amount since records began. So I'm wondering, is this a rational hedge against the currency weaponization we've seen? And not just since the Trump tariffs, but currency weaponization is been increasing more and more over the last few years. And of course, geopolitical fragmentation also feeds in. Or are we watching the formulation of some sort of a speculative feedback loop that's driven by people's fears?
I think it could be a little bit of both. But if you look at the longer trend, go back maybe 20 years. I think in Canadian dollars, not American dollar terms, but the Canadian dollar return over 20 years is about 1,000%, right? So that's gold prices now in Canadian dollar terms are 9 times higher than they were 20 years ago. So I think we could probably make the argument that, especially since the turn of the century, we could start with the dot-com boom and then the collapse, September 11th, housing market collapse in this part of the world, COVID, and Trump's first term and second term have been just one continuous run of uncertainty. So I think that part of this is the hedge, but part of this is maybe that there's a long term trend here, which is gold has always been the safest asset out there. And so maybe it's a little bit of both of what you're seeing.
Yeah, it often is the answer to many of my questions. It's a little bit of both. But we know that gold, it's been that symbol of wealth and power for millennia. And of course, we see the pharaoh tombs and so many chalices in olden movies always seem to be made of gold. This isn't something that's brand new. But in 2025, when digital currencies and when artificial intelligence is just dominating the headlines, why do you think that gold still holds such a powerful place in global finance today?
I think that you actually hit on it. It's that it has that historical importance. It's something that for centuries has been the safest place to park your money. And so, where you were talking about the movies aspect, I always think of Fort Knox and the ceiling high ingots of gold. And it's the way that you project your wealth. And so, I think because it has multiple uses, it can be used in the health care sector, it's used in electronics, it's used in the tech sector. Central banks for centuries were using that as a way to store their wealth. I think that people have learned that as well. And you can even go into just modern pop culture, right? The idea of the gold grill in your mouth, right, has shown that, hey, I have a status symbol here. So when you're looking at AI, when you're looking at cryptocurrencies, those things are not tangible. And so, because they're not tangible, sometimes when people hit the panic button, they want something that they can see. And even paper money is something you can see and touch, but it's only valuable because the government says it's valuable. But gold is valuable because it's valuable, and you don't need any government to convince you of it.
And I just want to push back on one of the points you made, Moshi, in case any of our listeners are under the age of 18. And that's that gold grills are statuses of wealth and success. They're not. Don't go and do it. I've noticed in Stockholm, there seems to be an increasing amount of teenage boys with gold and silver grills in their mouth, which isn't concerning me a great deal. But as we said at the start, gold continues to reach record highs. And there's so many potential reasons: the geopolitical tension, central banks, investor sentiment. What do you see as the main forces driving this rising gold?
Yeah, I really do think that it's geopolitical instability. So whether we're talking about Israel or Ukraine or just Trump's randomness, all of the tariff talk in the last 8 months is something that Canada and the U.S. at least have not seen for 60 years. I think that listeners maybe in Europe would be familiar with the idea that Canada, US, and Mexico have a free trade agreement by whatever name they know it. But we go back even further. The US and Canada had a free trade agreement from the 1980s. And prior to that, we had the Auto Pact, which was similar to the early days of the European Union. When you go back 70 years and the six countries were forming a free trade, I think it was around coal. Canada and the US were forming free trade around cars. And so, a lot of the movement over the last 100 years has been towards freer trade. Brexit is the exception, it's not the rule. And when you see a president of the largest economy in the world coming in and saying, I want to take everybody back 40 years, 70 years, 100 years, and I'm going to use trade as a weapon, I don't think there's a lot of people alive that know what that looks like. And so even your shrewd investors are going to say, I'm not fully equipped with how to deal with this. And so gold is the natural hedge then. And so we've seen that and other traditional currencies, Swiss franc and things like that, where people race to, again, just because of history.
And you mentioned before about digital currency, or you mentioned before about the value of gold, and more people, you hear people arguing that digital currency today has value. It didn't apparently have value, but now all of a sudden people are arguing it did. And I think Bitcoin's current market capitalization is about 1.4 trillion US dollars, which is about 1/10 the amount of all above ground gold today. And you hear digital currency referred to nowadays as the digital gold, but I think digital currency has been much more volatile. And whilst there are clearly uses for digital currency, and more central banks are moving towards it, and there's now stable coins, I'm still wondering. I'm not convinced, Moshe. Is the comparison between gold as a standard digital currency a fair one, or do you see that the two are just not like for like?
No, they're not like for like. I'm very skeptical about digital currencies. If you want to talk about what is money for, the first and foremost is that it's a medium of exchange, right? I can take that thing called money and I can acquire goods and services with it. So here in Canada, where there's only 40 million of us and we're right next to the US, the long accusation has been that Canada has monopoly money, right? Our money has color on it, it has pictures and things like that. So when Americans who have had just that traditional unicolor money, when they see Canadian money, they say, well, what are you doing? Playing a game up there? But the basic point is that Canadian money is a medium of exchange in Canada, but nowhere else. Cryptocurrencies have a problem in that I can't go into the local coffee shop and buy a coffee with crypto or whatever crypto. And so its time has not yet come yet. Money should be a store of value. It's not a great store of value, but it should be somewhat protecting against inflation. I always say to my students that if I take a $10 bill and I put it under my mattress, when I come back in a year's time, it's still a $10 bill. It hasn't turned into a butterfly or hasn't turned into a $5 bill. Cryptocurrencies don't offer that store of value because of its volatility, and it is more volatile than gold. Gold itself is volatile. We've seen a few years ago that it was crashing through the floor, but over long periods of time, it delivers a much better return. So I think cryptocurrency is slightly different, even though they try and dress it up the same way. We talk about mining for currency in that sector, the way that we would mine for gold, but it's not a valid comparison yet.
So you left that one open for a really obvious question. Then with the yet, do you think that as we start to reconsider finance and equity markets and different stores of value, that digital currency is moving in that direction or could move in that direction?
It is. I was doing a radio interview yesterday, and we were talking about when the dot-com crash happened. What was some of the motivators behind it? And one of the things that I was saying was that if you were alive then, everybody was talking about how the internet is going to change the world. But at that particular moment, nobody really knew what to use the internet for. You knew you needed a web page, but they were very, very primitive. You knew that the internet was going to help you find things, but there wasn't the supply of information the way that we have it now. And certainly the phones weren't designed in the way that we now have basically the entirety of human history on our back pocket. But now the internet has changed the world. So, it takes a little bit of time for it to find its natural way. The other comment that I had made was, back in the 80s, my father was one of the first people in my hometown to have a car phone. He had to take his car into the shop for the day, have it anchored into the passenger side floor. and then that 6 foot aerial antenna off the back. Nobody could have predicted that that car phone would turn into what we have now. So I think these two ideas together, when it comes to crypto, is it's still in that car phone stage, that it's not going to maybe be what we think it's going to be. And we know that it's going to change things, but it hasn't reached that point where it's actually come into play, where it's going to be effective. And so you mentioned central banks. I agree that central banks realize that, hey, its day is coming. And so they're looking to try and lay the groundwork for it now. But the other aspect is they might be looking to try and lay the train tracks so that the train goes in the direction they want, rather than just letting it go off in all directions. And a little bit of guidance might help move that along faster as well.
And you talked about the dot-com crash just before, and investors often call gold that safe haven. Is that a term that you like? Do you think that's a reasonable term? And over, if we look over the last couple of decades, certainly since Nixon's removal of the gold standard, how does gold compare to other assets like equities, bonds, real estate during times of uncertainty?
So it's a volatile asset as well. It can move 10 to 15% fairly easily in short time frames. So if you're looking to merely just jump in, cash out, and move, you got to have a real stomach for it, and you got to be able to time the market extremely well to do it. I'm not an investment advisor, so I wouldn't even be able to tell you that, hey, hold on to it until January, and that's when it's going to top out. But if you're in it for the long haul, it does deliver a great return. The thing is that with gold, it is a physical commodity. And so it requires storage. And if you're going to hold it in large enough numbers to actually make legitimate money, you need to worry about security as well. And so, there's a reason why Fort Knox is Fort Knox. I think that for the investor who's looking to make a killing, the amount of gold that you would need is sizable enough that you're probably better off just looking at companies that are in the mining and extraction of gold, rather than the physical asset itself. But hey, if you're just looking to make a few $100 here or there, and you have a little bit of time for some fun, hey, it's a great roller coaster ride, but you just got to have the stomach for it. Not everybody does. I certainly don't. And so my limitation is merely just as part of a portfolio, rather than this is the place that I'm looking to park my money because I'm scared about what 2026 is going to look like.
Yeah, I think being scared about 2026 is a valid concern, but we'll come back to that one in a little bit later. But you started to mention, Moshe, investment, and I wonder, from a portfolio construction point of view, how does gold fit into that? Where should we be looking at it? Is it, as you said, something that you buy a few small coins or gold chips and keep them locked up in your basement, or is it something that should be just used as a hedge, or do you see it as a speculative bet? I mean, how should people be interpreting and looking at gold when they look at it as a commodity?
Well, I think if they're going to look at it as a hedge, then that's fairly easy. When you start to see the world melt down around you, you quickly go grab gold. The hard point then is, what's the exit strategy? At what point do you feel that the world has become safe, that you can cash out on gold because you're worried of the subsequent crash that's going to follow behind it? IMF recently was reporting that there's the potential for, I think they said I can't remember the adjective they used. They said that there was a market correction that is potentially imminent. And I think they said it was like an uncontrolled one, or that it was going to lack structure. So, that's the type of thing then where people are going to say, all right, well, if the IMF is calling out the global economy, you run in. But is the IMF going to now issue a subsequent report that says, green light, all clear, everybody go back, business as usual? That's always the thing that concerns me. I think the other aspect is that if you're looking to invest, whether it's in the physical commodity or the companies themselves, retirees that are looking to buy a couple of Krugerrands, that's not a good investment, because your retirement is probably some sort of fixed date where you know when you want out. And if you're hoping that on that particular day or in that particular year, gold is going to reach a certain level that offers you enough peace of mind that you can walk away from your job for life, I don't think that's it. But hey, if you're a kid, you got a little bit of money from mom and dad for the holidays or for your birthday, and you want to take a little bit of a speculation. The good news is that gold, because it delivers that long-term return, it's if nothing else, going to adjust with inflation. And so as prices rise, the price of gold is going to rise. So in that sense, then it's a good return. Normally, I would say stick your money in a government bond if you don't want any risk whatsoever. But I'm not even sure the government bonds these days are 100% safe. At what point is Donald Trump going to say, I want to renegotiate the American debt, or I want to forfeit a few payments here and there? What are you going to do about it? And if that Pandora's box is opened, then there's lots of room for other countries to go down that path. The thing with gold, again, is that it's always going to be gold. And what makes it an attractive metal, it doesn't tarnish, it doesn't deteriorate, it doesn't break down into component parts. And so that purity of gold is something then that you can ride through.
It's a really valid point you raise about the unpredictable nature of Donald Trump. I mean, certainly his second term, he has carried through with most of his promises. Many people have disagreed with the speed or velocity or the nature of the way he's carried them out, but he's largely carried out what he said he would. But there is still a lot of unpredictability there, and whether he decides to try and restructure US debt and how he does that and the impact on bonds and treasuries is certainly concerning. And I think your point before about the IMF warning, I think the term they used was that global markets are facing an increased risk of a disorderly correction. Disorderly correction, which I'm not sure exactly what a disorderly correction is, but it doesn't sound good. And I think in their report they talked about these stretched valuations, the concentration in major stocks, notably the AI related mega caps. And I think that the top 10 stocks in the S&P make up, I think, 40% of the market right now, which is obviously a bit of a risk. These growing vulnerabilities from trade wars that we're seeing, geopolitical tensions, high government deficits. So you can see how the IMF came up with that information, and they talk about, in particular, US equities being well above their fundamental values, and I think this does raise the chances of a really sharp sell-off if negative shocks occur. But we just see so many negative shocks occur. We saw in April what I think Trump called the Liberation Day, and we saw the market drop 20 to 30%, and many, but then it rebounded so quickly. Last Friday, we of course there were several headwinds that came together, including China restricting the export of some rare minerals, Trump threatening another 100% tariffs. It was obviously just before earnings, the quarterly earnings call cycles started, and then Friday looked quite negative. But by Monday, everything was back to normal again. So I wonder when you see these cycles, and we know that when we look at history and we look at macroeconomic cycles, we can see that booms often end with corrections, both for gold and stocks. But when you look at the world right now, and particularly when we're looking at gold, what do you see as the biggest risks?
Well, right now, I think when we talk about the cyclicality of an economy, other than say the 1970s, better part of 100 years, most of those cycles were being driven by the demand side, right? Alan Greenspan talked about irrational exuberance, right? So businesses maybe lose their minds a little bit, and the valuations get a little too hot. Consumers get a little too spendthrift and forget how to save money. And even governments can go on a bit of a spending spree at times. But the last 5 years has been characterized by mostly supply side disruptions, right? COVID was the ultimate supply side disruption, where these long supply chains that we had spent 30 years building since the Japanese arrived with their just in time inventory methods were now being called into question. And how many countries were saying, if we ever face another pandemic, we should be onshoring as much of our supply chain as possible. So now, when you have Trump coming along, who's creating essentially a man made supply chain concern, where he's saying, if you're not building it in the US, then I'm going to tariff you, or I want to bring all of these jobs back. Again, the conversation is, should we be reducing our reliance on the US economy? There's not a lot of people out there that have that experience. The 1970s OPEC oil shocks was really the supply chain disruptor. But if you were around and actively involved, let's say you were in your early 20s, so you're just breaking into the business, you're now in your 70s. So if you're not already retired, you're certainly 1 foot out the door. I don't know then that there's a lot of people around today who have that actual experience. So beyond just the supply chain disruption itself is a potential issue, it's the lack of institutional knowledge of how do we deal with it. I'm reminded of Ben Bernanke, the former head of the Fed. I believe his PhD dissertation was somehow connected to the mistakes made during the Depression and how it took a bad situation, made it substantially worse. He was right person at the right time to be in charge of the central bank when economies are melting down around him. And he says, hey, I know how to make a bad situation into a good situation rather than make it something worse. I think that we don't really have those people right now in the key positions of power to try and know how to withstand the global headwinds that are all coming together right now.
So, if you were advising policy advisors, if you had a room full of policy advisors from different Western and Middle Eastern and Eastern governments in front of you, what would your advice to them be?
Well, the first thing is move towards more free trade, not less. This is not the time to pull up the drawbridge. I was an ardent anti-Brexiteer I thought that was going to shoot the UK in its own foot. But the EU project is incomplete. I think that right now the fear among many policymakers is if they're not being drawn into that more right wing than we're used to seeing, much more pro nationalist, anti trade, and suspicion of immigration. Look, you don't necessarily have to go all the way back and pull the drawbridge up, but at least put a couple of guards at the drawbridge then if you're not prepared to go full out into the world. More free trade allows for a little bit of that insulation then to absorb shocks that if they are coming from outside, there's strength in numbers there. So that would be kind of first and foremost. Beyond that, I think a lot of governments these days are finding that balancing their budgets is an increasing problem. How many French governments have fallen, not just in the last 18 months, but in the last 50 years, we see French president or prime minister say that we need to address our budgetary issues. Everybody cheers, they vote for the person, then they go to make changes, and then there's protests in the streets that breaks the government. And France is not unique there, but they're the ones that have the headlines these days. Governments better figure out how they're going to balance a demographic time bomb that's waiting for them. And all of the promises that they made. Scandinavian countries had their crisis maybe in the 80s and 90s and had to deal with that. But those were much smaller economies with much smaller populations. But there's maybe a lesson to be learned there that I would say, all right, let's start with this as a case study and start working our way out into larger and larger countries.
It's interesting you mentioned Scandinavia, and at the start of your response, you actually mentioned being a proponent of free trade. I'm currently doing some work for a large energy company in Europe, and I've got to say, I am so impressed. I spent a few days with basically them teaching me how their business works and the markets of how energy is shared. So, if wind turbines in Germany are producing extra electricity, it means lower costs. And if Poland's energy prices are spiking, well, then they can offset that by buying German energy. And this occurs not just on a month by month basis. This actually occurs every day. Every day at lunchtime, they buy and sell the energy, and then once that's bought and sold, there's still obviously redundant energy that appears the next day. So they can be buying it on a 15-minute interval. If there's a country that's connected to another country, they can be buying energy, and it means all of Europe gets lower energy prices. It's such a fantastic system. I'm just so very, very impressed, and I think the EU should be doing a better job of advising its citizens about this is what has been created. And you don't see it. We just turn the light on. But the electricity is being maybe coming from Poland. It could be coming from Sweden or Norway or Germany. And the connections here are absolutely fantastic. I've been really, really impressed by that connectivity.
And I think that you'll find that, in a lot of cases where we've seen famine and like real breakouts of war, it's usually because of the lack of connectivity, right? So when a drought hits one country, usually what they do is they start blocking the exports of food products, figuring, well, this will save us. In fact, it makes it worse. There's nothing wrong with importing food from other countries. I always say that we understand on a very micro level the importance of trade. I mean, unless you're living in the backwoods somewhere where you build your house with your own hands and you kill your own animals for food and clothing, we're all reliant on somebody for something. And we really never ask questions that, did that coffee shop really need to charge me that much money? We just buy it and we might grumble, but we go back there day after day and continue to do it. We go to the grocery store to get our food. We go to the clothing stores and we trade with each other. My neighbor says, hey, can I borrow a couple of chairs? I'm having some friends over. That's fine. I can go across the street the next day and say, hey, can I borrow a cup of sugar? I'm trying to make a cake for my spouse's birthday, right? Those are the types of things then that we understand that trade is good and we never question it. But the moment we start putting labels on people, like I say, hey, if I called you North Korea and you called me China, all of a sudden then we start saying, well, that's different. It's not different. It's our geopolitical mind, it's our psychological mind that interferes with our economic mind. And if we took maybe a little bit more of an approach to whether it's energy or just any other commodity out there, that's the type of thing then that acts as an insulator. And it's the same way that, look, if you're married, your spouse is there to some extent to help give you a lift when you're feeling down and to help you stay grounded when you get a little too high. And you're offering the same thing back in return. When you say I do, what you're really saying is I do to a free trade agreement among each other. And if you approach it like that, I think that's one of those things then that it does extend to the macro level. It's just that somehow we look at foreigners more suspiciously and think that there's an ulterior motive. They just want a better standard of living like the rest of us.
It's fantastic. I love that analogy. I actually heard a couple. They have a relationship podcast, and they talked about when they come home from work, they ask each other how they're going. But one of the first questions they ask is what number each other's feeling. And if one says, "Oh, look, I'm rocking. I'm feeling like a 9," and the other one goes, "Oh, that's good. I'm feeling like a 4," then they just know. Well, I need to use my number to boost you up. And if they both go, I'm a 3 today. Oh gosh, I'm a 4. Okay, then you're both in a rough spot. Be gentle with each other tonight. And I thought that was such a fun way. And of course, I know some of our listeners might be thinking, well, that's very clinical. Yeah, maybe it is. But it was a great way I thought of just balancing each other out or recognizing tonight we can't balance each other out. We just need to be gentle with each other. And I think it's a great way if we could take that to our geopolitical level as well. Wouldn't it be a nice system we're working in?
Absolutely.
We look at emerging markets and the share of gold reserves that's been held by emerging market central banks has climbed from I think it was about 12% in 2010 to about 30% today. There's a lot of talk about de-dollarization and moving power out of the US dollar. Do you think this is de-dollarization by stealth? Or do you think it's signaling something else about the changing architecture of global finance and trade?
Well, I'll go back to an earlier answer and I'll say that maybe it's a bit of both. The US is maybe no longer as trustworthy, and that's in a variety of areas, right? So we've seen that geopolitically that maybe they can't be as trusted. They were the traditional global police officer, and here in Canada we used to see ourselves as the the peace officer. So you go fight the war and make everybody shake hands, and then we'll come in and bring in the blue helmets with the UN and hold everybody to account. But I think that it's not just a Trump thing. I think this has been going on maybe for 30, 40 years now, that successive presidents have decided that they're going to abstain from foreign affairs, or it's not going to be the legacy on which they want their presidency built. And so as the US has disappeared, that vacuum is being created that, well, who's going to be then the global police officer? China has said we're willing to do it, but I think a lot of countries are suspicious of it. And so the idea then that if you can't really trust the US, why do you want to hold their currency then? What exactly makes them that global currency that they have traditionally been since, say, the Second World War, give or take? Holding gold then would be the natural way to insulate against that. But I think part of it too is that as economic growth happens, as these emerging markets start to move into more mature markets, they're going to follow the path of their predecessors, which was you hold gold as a way to insulate yourself or to protect yourself. And so, if we look at Switzerland or the U.S., huge traditional holders of gold, emerging markets are going to say, well, if we want a spot at the big table, that's what we need to do as well. And so they're stepping up their game. I think maybe a third aspect is maybe a little bit more of the diversity in gold extraction. Who are the big extractors of gold? Canada, I think, is the fourth largest one in the world. Russia and China are up there. And so 50 years ago, gold would have been much more concentrated in terms of where it was coming out of the ground. And so as more and more countries are getting into the gold game, that gives these emerging countries then, or emerging market countries, more opportunity to get gold, and to make those links beyond just gold acquisition, but maybe signaling to other countries that, hey, we're here, and maybe there's other things you want to talk about, whether it's security or trade or other forms of economic interaction.
And I know academics love doing forecasting and predicting the future, but if you were to look forward a decade ahead to 2035, what do you think gold's role will be, and how much do you think of the current market systems that are in place today will still be in place then?
I don't know that it's going to change substantially. I think that we're going to see the gold price continue to rise. If you told me that it's going to be, say, $10,000 10 years from now, I don't think that I would blink. It's not that, that's the number I would go with. It's just that number sounds as good as anything else. I think that we're going to continue to see volatility. And I know that there are a lot of people out there that are saying we just got to survive 1,100 more days and then Trump is gone. I'm not taking that approach because I think that his legacy will be a lot longer lasting than just a two-term presidency. Once you decide that you can use trade and tariffs as a weapon, who's to say that a Democrat president in 2028 wouldn't use that as well? Maybe they decide to target Europe and say, you know what? I don't like the position you're taking on labor standards or on the environment. They can pick any issue that is important to them and say, we're going to use tariffs to correct the imbalances that we think are important to us. So once everybody has seen that, hey, free trade was one way to do things, not the way to do things, then who's to say that this system doesn't collapse? And in Canada, our big fear these days is that that North American Free Trade Agreement is up for review in 2026. And it's part of the reason why I think that Canada and the US haven't been able to settle their differences over the last 8 months. Who's to say that Trump's going to say, you know what? I don't like a free trade agreement. It's the one topic I've been consistent on for 40 years in the public eye, going back to my days as a property developer. I'm just going to rip the whole thing up and walk away. If the UK can leave the EU and if the US can leave a North American free trade agreement, then smaller countries are going to say, well, if they can do it, I can do it. And that's where I think then that we're going to have maybe a much longer time period of global uncertainty, and then add to it just the normal sorts of uncertain things that are going on as the population gets larger, climate change, geopolitical instability, the battle for who will be the global leader, whether it's China or the US. In the past, these things have been settled through war or proxy wars, whether it was the USSR in the US, or whether it was Europe in the Second and First World Wars. There is this risk then that at some point things are going to come to a loggerhead. Imagine if China were to just go and grab Taiwan and say, what are you going to do about it? Would somebody be willing to do something about it? Would Trump be willing to do something about it? I just think that there's so many things. Long story short, I don't think gold is going down as a long-term trend anytime soon.
And Moshe, I know you like to travel and you're a senior lecturer in economics. So when you look around the world, what are the international risks that concern you the most?
There's two things. One, on the outside, I think a lot of people are looking around them saying, what's happened to my life? Why is my standard of living not rising? And they want answers. And usually when people hear I'm an economist, they start saying, okay, well, you tell me, like, why don't I have it better than my parents? Like, I have the answers. What we're finding is that there's a global erosion in trust of institutions. Whether that's central banks, whether that's health experts, whether it's the government themselves, and I'm seeing that when I come across people, they just feel that their world is contained within their social media apps, and so those are the people that they trust in that echo chamber where they have like-minded people saying, "Yeah, I don't trust these people." It's not just a left or right thing. I think that this is an issue then where we've lost that humanity aspect, and that's a problem then. So in terms of how it connects to gold, people are going to look then to something that's portable that they can move with them, and money is not that. I think the other part of it is that there's this weird sort of relationship that we have with our governments. I always say that governments are our employees, not our employers, right? If I hired you to work at my Starbucks, and I never told you how to run the Starbucks, but I come back 5 years later and say, wow, what a mess you've made, you're fired, you would look at me and say, hey, aren't you the boss? Shouldn't you have told me how to run the store? We elect governments every 4 years, 5 years, 6 years, depending on where you're from. And we basically tell them to run the Starbucks, but without telling them how to run it. And then when we come back in 4, 5, 6 years and we say, wow, look at the mess you've made, we fire them. Politicians are saying, look, give us guidance, tell us what you want. So we have this weird relationship where we don't really tell them what we want. We maybe tell them what we think they want to hear, or we just ignore the entire process altogether. But the other aspect of it then is that governments are a little bit more free then to, line their own pocketbooks or to do what's in their best interest, and that's not necessarily what's in society's best interest. So, that poses a problem then for people too, where how can you know then that decisions that governments are taking are really in citizens' best interests? And again, you start turning inward at a micro level. And I find that there's just a lot of fear out there. So communication is really important. Transparency is important. And government saying, look, we're taking this decision for this reason, and trying to work to stem disinformation, misinformation out there. I think they've maybe abdicated some of that responsibility, and that's making it more difficult to not just for financial markets, but for economies to find growth opportunities.
And so when consumers, when members of the voting public tell their elected officials, we want better services and we want lower taxes, the classic, which doesn't necessarily add up. And when politicians say, yes, you've been victimized, you've been picked on, it's the other that's made your life more difficult, and I'm going to fix that. And then, of course, we end up with more and more populist governments across Europe, across North America, across many, many countries. We even see it in places like the Philippines. Who would have thought that the Marcos would be coming back into power after the debacles of the 80s? But this is what we're seeing. People are desperate for change, or they think they're desperate for change, and they're told that they're justified in feeling that way. What are some of the indicators, some of the economic and indicators that people should be looking at to be grounded in what the truth and the reality is?
Well, I think that as long as government statistics are produced at arm's length, as long as you're not firing people that produce those statistics because they don't tell the narrative that you want, usually those statistics have been designed in a way that if you look deeply into them, they haven't really changed much for decades in terms of how they're calculated. So you get these nice long data sets where you can see trends, and you can also find then that the events that maybe divert from those paths, you can say, all right, this worked, this didn't work. I think that's most important, right? Because data beats all, and the government can say whatever they want. And I think that's the problem that we're seeing right now with the US administration is that when the head of the Bureau of Labor Statistics says, this is how many jobs were created, and the president says that's a lie, well, no, it's not a lie. So rather than try and explain what's within the data, you fire the person. That's again where that erosion of even trust in numbers comes from then. I think that, as always, evidence-based decision making is much better than going with your gut, or going with something you heard somebody say, and gossip and hearsay. So I think it's really important that that data is put out there. But I think also it's important, even though I might be a little bit long-winded in the way I give my answers, somebody needs to explain what that means in common terms. Academics who come out and talk in an academic way, that's great for other academics. But if you want to talk to the general population, don't use a lot of jargon and specialized terms. Say what this means for the average person in the street, right? How are you going to deal with government deficits and government shutdowns, right? If that option is presented to them, then maybe it's a little bit more trusting in what comes next then, right? I always say that it takes a lifetime to build up somebody's trust, and it takes 5 minutes to lose it. And I think what happens is, if central banks or governments or countries lose the confidence of their populace, it's extremely difficult to come back. And that's what creates the vacuum then for these strong men, mostly, to be able to fill that vacuum and say, well, I'm here to protect you.
Yeah, I liked your answer, and I really appreciate going back to the data from when I was studying law. I mean, the answer was always go back to the legislation. There's case law, there's precedent, there's judgments, but what does the actual law say? You go back to the basics, and I think listening to the head of the U.S. Federal Reserve, Jerome Powell, might be a bit dry. It might not be the most interesting video you might find on YouTube today, but I really find listening to him is really quite good. Of course, we get everyone analyzing it, the markets and the journalists and politicians commenting on what he said. But going back and listening to what he says, he's got quite a methodological approach, and quite a systematic way of explaining what he wants to say. And I think he's someone that's quite good to listen to try and understand his decisions, or the decisions of the US Federal Reserve, at least, and how they perceive the market.
And that's something that's evolved over 30 years, right? The Bank of New Zealand, the Bank of Canada, and the Swedish bank were at the forefront of being a little more open and communicative with monetary policy decisions that they were making. Prior to those three and the evolution that came after them, trying to understand central bank decision making was a little bit like Kremlinology, where you had to kind of read between the lines to see what people were saying. So it's good now that the Fed is kind of buying into that. And Jerome Powell, of course, was very worrisome to markets at the time, because it was thought that he was just going to be a Trump crony. And the fact that he's been able to push back and say, look, I'm not doing what you want because you want it. I'm doing what is right. That in itself means that when people now hear what he has to say, they trust that, hey, he's not being influenced by outside politicians, and that connection then makes it a little bit easier then to limit the damage, that when there's a change in monetary policy, it's not going to create these wild swings in GDP that would have normally come with it. And those wild swings in GDP, of course, have even bigger swings for each individual, because GDP, of course, is just the average. So some people are going to experience above average volatility, or some below average volatility. And those are the types of things then that can help you minimize. So again, stability really comes from communication, transparency. So it's not just through the central bank, but when we see it done well, that's the type of thing we should be emulating. And I think that from a political aspect, you need that politician who's going to tell you the facts rather than what you want to hear.
I think that's a great lesson for all of our leaders and managers. But Moshe, thank you very much for coming on the International Risk Podcast today.
My pleasure. I'll come back anytime you like.
Well, that was a great conversation with Dr. Moshe Lander. He's a senior lecturer in economics at Concordia University. And I really appreciated hearing his thoughts on how gold is perceived and the role gold plays in trade and global economics. Please remember to go to YouTube and search for the International Risk Podcast, where you can watch and listen to our episodes of the International Risk Podcast. This episode was produced and coordinated by Melanie Mamoon. I'm Dominic Bowen, your host. Thanks very much for listening. We'll speak again in a couple of days.